Hi everyone, today let's talk about the Apple event where they launched the new iPhone and a new Apple Watch. Then we'll quickly go over Oracle's earnings. Then we'll get into the economic data, the charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Apple had their event and they talked about some new products. They said the iPhone 15 and the 15 Plus will have USB-C charging starting at $800 and then the Pro will be $1,000. New Apple Watch will be 95% titanium, definitely interesting, with a 72-hour battery life, as well as Apple AirPods with a USB-C charger as well. And then they talked about these other things, Apple Watch Ultra 2, which will have the most powerful chip yet. And they also mentioned the iPhone will be the lightest and have the thinnest borders due to the titanium case. Definitely interesting move to go over to titanium, more expensive, and it's a more difficult material to work with. Overall, this was a bit of a buy the rumor, sell the news, and Apple was down around 2% on the day. They also mentioned that the iPhone 15 will have spatial video for replay on the Vision Pro, which they announced earlier this year. iPhone 15 Pro Max will be $1,200, and it will have upgraded cameras. But one of the most interesting features here, in my opinion, is the industry first 3nm chip. They say that Taiwan Semiconductor is going to provide these. They're going to be more efficient and they're going to be faster than ever, especially with Apple's artificial intelligence accelerator. Of course, they had to mention AI, and that it will be integrated with the new Apple technology, which does put Apple on the cutting edge here for phones. Moving over to Oracle earnings, this was a dumpster fire. The shares were down 12% on Tuesday. Biggest drop in 2 decades. Definitely not what you want to see. They mentioned their cloud is seeing some near-term headwinds. Definitely not great. They say the last time they had a steeper drop was 15% back in 2022 in the dot-com bust era. And Larry Ellison lost about $18 billion in worth. He's still the 4th richest person in the world with $140 billion, so he's definitely not hurting for money, but that is a pretty substantial loss in a single day. Of course, big companies like this have been selling investors on AI technology integrated with their Fusion Cloud and human capital management software. And then they mentioned here, investors were pricing in more upside related to AI, especially with reference to their cloud-based business. They also mentioned some issues with the Cerner unit, which is a healthcare company that they purchased for $28 billion. So big acquisition, and they're seeing some issues there. Their cloud services and license support segment did rise by 13%, but that seems to be just about the only good news that we got out of this earnings report. Shares were up 34% year to date, so it was beating the S&P 500, but down, like we said, 12% today. Moving over to the economic calendar, not much. 10-year note sold for more than 4.25%. Definitely interesting. Looking at tomorrow, this is the big one for the week. We got CPI, core and headline at 8:30 Eastern Time, 7:30 Central. And then the federal deficit, always interesting, continuing to run a massive deficit. Absolutely not what you would want to see, and I'm sure that'll probably have some impact here on CPI. You can see the expectations for headline are a pretty substantial step up, and if they miss to the upside, that could absolutely put pressure on equities. Moving over to Max Payne just for a moment. Not much has changed here. A few options came out of the market. Put call ratio still very high. Put wall at 440. Call wall 450. We're still trading in between those at 446. Again, not much has changed here. Expecting a close between those two levels, 445 and 450 on the SPY. Moving over to the charts, starting off with the SPY on the hourly and the daily. You can see we did continue to fall from that after hours price action. Found trend support, rallied up, hit the 144, and then broke down from that level. Still holding above 445.49. Touched that level just for a moment, closed above it. Highly traded zone, right at a pretty critical level. If this holds, we can absolutely look for a continuation. If this breaks down, you can see here on the daily chart, you got the 21 sitting at 444, or this could push all the way down towards that Max Payne at 441. Definitely interesting here. We're continuing to wedge up. We're basically at wedge support as well as horizontal support. Looking at daily momentum, we did have a step up yesterday, and then we stepped right back down here today. RSI breaking below the SMA, volume pretty decent on the day, especially on a down day after hitting that 9 EMA. I was kind of hoping for a little bit of a follow through. We didn't quite get that. Got a gap down, filled the gap, and then broke down. And that looks a little bit bearish going into the CPI report. Moving over to the NASDAQ on the hour and the day, you can see we hit the 200 on the hourly chart. We're still holding above my level, 372.85. We broke below that highly traded zone. We couldn't hold above 376, so we had that initial breakdown, broke all the EMAs and SMAs in this little area around 375.50, and your next level of support was at this previous low or the highly traded zone in here around 374. That level broke, and then my support down here tested this low, but we're technically holding above it. I was watching this pretty closely into the close. Momentum did start to turn bullish, and if we get a nice CPI report, you could absolutely look for about a 1 to 2% move higher on the NASDAQ. But similarly to the SPY on the daily chart, big leg down, looks bearish. RSI looks bearish as well. Moving over to the Russell and the Dow. Russell threw some big wicks once again to that 21 EMA on the 4-hour chart. Ended up breaking down towards the end of the session. This zone continues to hold, so still chopping here. Not much direction at all, waiting for CPI probably. Dow threw a big wick to the upside. Ended up closing below 347.67. Still slightly bullish trend, but not showing much difference here. Momentum moving towards bearish. RSI still slightly bullish. Again, still consolidating in this range, but it does look okay going into CPI. Moving over to Apple and Tesla. Apple moving much lower. Hit the 21, moved down to my next level at 176.15. Still holding at that level through a wick to the downside. Bearish momentum, bearish RSI. Big volume on the day. And this looks more bearish to me now. So you got the big move down, slight retrace, bigger move down. You want to see it take out that 144 at 173.64. Then you're looking at 170.90. And if those two levels break, then you're looking for a pretty big down move in my opinion. Tesla, after the big day yesterday, gap down, threw a wick to the upside, ended up slightly bearish at this highly traded zone. Definitely interesting. No change to the range here. We're still between these two levels. And it's probably just taking a breather before it gets another leg higher in my opinion. Moving over to staples, we ended up breaking down from that 55 EMA. We were watching that yesterday. Said if it broke here and then pushed through this level, it could be bullish. We ended up holding at this level and then breaking back down. So now we're kind of consolidating at this highly traded zone. Discretionary, also throwing some wicks and moving lower just like Tesla did. Again, that's the driver here. Still holding at VWAP in the 9 EMA. Certainly could push up again from there, but you can see this structure. Continuing to make higher highs and higher lows. Just seems like we're forming a high here, looking for a bit of a pullback, and potentially looking for that next push higher. Moving over to breadth on the 50 and the 200-day average. What another interesting day here. So we had a bullish day yesterday on the 50-day average, which was slightly bullish on the 200. And then here today we get a bearish candle on the 50-day average. But we get another bullish candle on the 200, so still clear divergence. We're still higher than this previous low, whereas the 200-day average is basically flat with this previous low. But bullish day, still consolidating at this level. RSI on both at an interesting point. 50-day average needs to hold here and push higher if it's going to do it. 200-day average needs to push through this SMA. It's basically right on top of it. Momentum ticking towards bullish. Again, does seem like we're going to get a nice little push higher. It's just not quite happening yet. CPI is going to be important tomorrow. Moving over to the dollar, you can see we rallied up late last night and into the early morning session, and then ended up breaking down throughout the day to the 200 SMA on the hourly chart. That is pretty impactful here because you can see we're below all of the EMAs here on the hourly chart, just holding that 200 on the 1 hour. If it's going to hold, it really needs to do it now. If this breaks down, we're probably looking for much more downside. Probably makes sense to adjust this now to this kind of structure on the daily chart. Probably adjust this up here, re-looking at this structure again. But looking at the daily chart, if this level breaks and we start to push through that 21 EMA, that's going to be quite bearish. Momentum looking bearish, RSI breaking below the SMA. Good CPI number means the dollar is going to move lower. High CPI number means we could see this dollar pushing higher, looking for those higher rates. Moving over to the VIX, gapped up, rallied a little bit, still in an area of consolidation. We've been talking about it for a while, but it is right at the highs from this consolidation before we had that gap up. Again, CPI could push us higher, definitely interesting. It's got some clear resistance at 1490, and these EMAs certainly could break down from that level if we get into that zone just like we did here. but it is going to be interesting to watch going into tomorrow's session. Moving over to my accounts, you can see I am again only holding my core position here. I continue to roll down these calls and protect myself to the downside. I put on some calls throughout the day in order to protect myself. A good judge of that is here. You can see the shares were down $836, but I only ended up losing $350 on the day, so protect myself from most of the downside on that. I did trade in and out of a couple of positions. Similarly on my IRA, I traded in and out. Lost a few bucks there as well. Not holding much going into the CPI report, and I do plan to put on some positions afterwards based on what we see in that report. Let me know down in the comment section what you thought of the Apple products. Is it more of the same stuff, or is it an actual step into the next generation of Apple, and will it bring more profits and revenues for the giant company? Also, let me know what you think about Oracle. Are they basically done, or are they worth watching in the future? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.